Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P, the Qs, and the broad market having a nice little upswing. We have now officially filled the good old Greenland gap on the S&P and on the QQQs, but you can see that the market moves were fairly broad-based again, as we have participation from more than a few sectors. And this time, technology actually doing a good job. We know that big tech has largely been left behind over the course of the past 2 months, but today there's a few names that showed up in a big way, namely Meta up 5.66%. Now, this is a far cry from even the levels that we were at in the month of October, but it's a start, right? Meta was up as much as 6.5% today at one point, but a very decent showing by that company. And all across the board here, except for good old Netflix, you had some pretty decent moves. So, in terms of the Greenland gap, is it still time to be buying this possible breakout trade, or is this just a gap fill backtest for some possible shorts into further market consolidation? We're going to talk about those two scenarios in today's video, of course, and also bring you a whole bunch of news. So, speaking about today's video, part number one, obviously dedicated to our news section, where I'll be bringing you guys the highlights of the day, but also certain elements key to the markets that I do believe will be fundamental to our analysis of kind of identifying the best possible themes and sectors to play for 2026, because we know things have changed up a little bit this year in relation to 2025 in terms of the most favorite names in the market right now. Thereafter, we'll get into our technical analysis portion of the video. We'll go over the SPY, the QQQ, and most of our minor sectors, check on the rotation, check on the health of the market, and identify any possible trade opportunities therein. Thereafter, we will get into our big tech name list. And since we know that we're coming into very big tech earnings over the next 2 weeks, we will derive whether or not these companies are well positioned into their earnings, and can we possibly buy them into their earnings, or would it be maybe best to wait until after? And at the very end of the video, guys, of course, we will take a look at everybody's favorite segment of the market, the biggest gainers and losers of the day. Of course, there's always many of those on my list, so we'll take a look at the names to the downside, see if there's any nice trade opportunities there, and also some names to the upside. And once again, for the names on the upside, printing highs, we'll play the good old game. Is it too late to invest in some of these companies? So let's get right into today's video. Should be a fun one, guys. And if you want to jump to any portion of the video, just always remember the timestamps are linked down below in the video description. So S&P up today, 0.5%. The Q's up 0.73. Taking a look at the heat map, once again, a very nice broad market. But this time, big tech was actually there to play ball. So very nice performance across big tech. Only really Broadcom coming down a little bit. And it does matter because they are like a $1.4 trillion company right now. So they do hold their weight in the index. As you can see from here, financials, not too bad of a day. Anything from banks and credit cards. And we've been saying that the banks and credit cards could be interesting over the last few days. So perhaps some of you have been building positions for 2026, as there are many macro tailwinds that do favor financials. Moving on to healthcare. Healthcare, not too bad of a day either. And the bottom half of the market, some slight pullbacks, right? Bit of a mixed day in industrials, bit of a mixed day for some of your consumer defensives, but broadly speaking, many more names were up than down. And you can see that even better expressed in our one-day relative performance chart right here. Communication services, strong day. But of course, those are majorly led by Google and Meta. So thereafter, we got some basic materials, cyclicals, technology, financial, and healthcare doing very well. And to the downside, unfortunately, real estate, utilities, industrials, and defensives overall. The 1 week, not too bad. After the Greenland gap down, we've recovered most of your losses overall. So not too bad. In terms of the fear and greed index, we currently stand at, once again, a neutral level. As we know, the markets are kind of struggling to mount above brand new all-time highs. We know the markets are very broad, but a lot of these indicators, guys, are based on either momentum or net new stocks above their highs and at 52-week highs and lows, right? So in terms of percentage gains above our long-standing 125-day moving average, you can see we're still in a fear category, right? This only pivots to greed when you get a big distance away from your longer-term moving averages, but still the market is healthy, right? Stock price strength remains very strong because of the increases in market breadth. Stock price breadth, there you go, right? Again, another indicator. This one's measured by the McClellan Volume Summation Index, whereas you guys know that I like to look at the percentage of stocks above their 20, 50, 200-day EMA. We'll take a look at that very shortly, and put in call options into extreme fear. People still buying more protection than they were possibly in late December. So that is why you got a couple mixed indicators here. Your markets are still neutral. This is not a gauge of sentiment. No, it's a gauge of several different momentum indicators in the markets and whether or not people are buying in insurance as measured by moves in the VIX and the put and call ratio. So moving on to our breadth analysis real quick, just before we jump into our news, guys. Market breadth, very good today. Again, right, percentage of stocks above their 20-day EMA, a very healthy 70% range. Percentage of stocks above their 50-day EMA, also very healthy, 70%. But you know that when you come in to these big areas, right? Well, that's usually when the markets can come into a little bit of turbulence overall. And lastly, percentage of stocks above their 200-day EMA. This one is nice expansion, guys. 66% of all stocks above their 200-day EMA. So essentially, the way that you can read this, right, is there's one segment of the market that's a very large weight in the market that hasn't performed too well, and that is big tech, right? Names like Microsoft, 20% off its highs, Meta's 20% off its highs, Amazon is like 7-8%, so not too bad. Apple's 15% off its highs, NVIDIA hasn't done anything in like 5-6 months, Tesla's slightly off its highs, and Google is at its highs. But there are large components here that have not gotten a lot of love. What's gotten a lot of love is the rest of the market. So in the event that your market breadth were to wane down a little bit, well, the expectation is that the money might just rotate into some of the safest companies on the planet, which is big tech. So I wouldn't be too worried about those momentum and breadth indicators curling over a little bit. If they do, there's a large portion of the market, a concentrated portion, but large by size, that the money can flow into, because we know the markets are just a sum of a very large rotation game overall. So keep that in mind. So before we get into more technical analysis, guys, and go over the indexes, let us cover our news cycle for the day. So number one, retail investors yesterday, after the tariff pause or cancellation, whatever you want to call it, retail investors bought the dip. Individual investors net bought $1.8 billion of the S&P 500 ETF, the SPY, the largest daily purchase since October. And when did they buy in October? Well, after we got the tariff cancellation on the China rare earth steel after October the 10th, the third largest inflow since the April 2025 market recovery. So these three events, guys, April, October, and yesterday, all after tariff pivots. Year-to-date, retail purchases have exceeded $1 billion every single day. So people remain very bullish on the market. Retail investor risk appetite is stronger than ever right now. And here's a nice little chart that expresses some of your retail buys. And people have been buying the dip, man. People called out the Greenland gap sell-off to the downside, right? Some of your largest purchases in the last few days overall. So looking very good there. People continue to buy the dip. The buy the dip crew is still very strong, right? You can see some of the peaks October during the China tariff sell-off, and then obviously after Liberation Day, where people just absolutely loaded up while other people were being super fearful and panic selling the bottom. Moving on here to some other news. Sam Altman been meeting with countries in the Middle East to raise yet another round of funding for an OpenAI IPO later this year. $50 billion round is what Sam is trying to raise in the Middle East, which would put the company currently at a $750 to $830 billion valuation. Now, there's another IPO that's coming out this year, and that's going to be a big one. SpaceX currently shopping for some underwriters, setting to hire Bank of America, Goldman Sachs, JP Morgan, and Morgan Stanley to lead its IPO in 2026. The IPO is slated to be as much as $1.5 trillion. But why is Elon Musk raising all this capital? Is it just to plant some satellites into space for his Starlink endeavor? Or is it just to be a transportation company for the International Space Station? No. If you read a bit more into the details and you actually take Elon to his word, you will see what's going on behind the scenes here. And this has been a very popular theme for the past 2-3 months. It is data centers in space. Yes, data centers in space. It's a very real thing. Sundar Pichai from Google talked about it a few months ago, where they were exploring the capacity to do that. Microsoft has talked about it as well. And now Elon Musk, I will leave you with his commentary at Davos today. Let me just turn the sound on so you guys can hear. And here we go. A little bit of a clip.
data centers in the space.
I think the case, it's a no-brainer for building solar-powered AI data centers in space. Because as you mentioned, it's also very cold in space. If you're in the shadow, then it's very cold in space, just 3 degrees Kelvin. So you just have solar panels facing the sun, and then a radiator that's pointed away from the sun, so it has no sun incidence, and then it's just cooling. It's a very efficient cooling system. So net effect is that the lowest cost place to put AI will be space, and that'll be true within 2 years.
So there you go. The lowest cost to put data centers is indeed in space, because we know that data centers require a ton of energy, which can be, supplemented from the solar panels that he's talking about, right? But additionally, the cooling requirements are very heavy and very intensive on data centers as well. So this is going to be a very interesting theme, guys. So pay attention to the space trade. We've talked about it many times over the course of the past month. This is probably going to be one of the hottest narratives leading into the SpaceX IPO, and there's many companies that can be closely associated with that trade as well. Moving on a little bit further, talking about the infamous energy requirements. Energy is another theme that you should be paying very close attention to in the markets. We've been talking about it here for the last month and a half as part of our main themes for 2026, where you can possibly find the most amount of alpha, because nobody is looking there. You might think everybody is looking there because we constantly live in an echo chamber, us who watch YouTube videos every day on finance or browse Twitter every day for more financial excerpts. But most investors are not looking this way. And I'll show you a few charts right here, which will lead you to that same conclusion, right? So by 2033, the US faces a 175 gigawatt shortfall. Here is your impending power crisis. It really starts taking root in 2028. And then the power slowly is just not enough for the peak supply needed from all these data centers and different AI endeavors, such as, charging stations for robo-taxis and all things of that nature, all things AI that will be implemented, right? So there's going to be a very big power shortage. The time to take advantage of this possible bottleneck might indeed just be now into 2026, with all of the money being plowed into further grid infrastructure, whether that's solar or otherwise, right? Nuclear as well. Moving on a little bit further here, speaking about nuclear, right? This one right here, guys, there's more shortages. So the themes of 2026, there's a lot of them, and a lot of them imply supply shortages or bottlenecks, right? So pay attention to this. This is your structural supply shortage of uranium, coming from this year all the way through the end of the decade. And then, as you can see, guys, in terms of existing production, secondary supply, and returning mine production, you do not have enough. Notice the demand curve, this orange line, keeps going up, which is why I keep pounding the table on the nuclear trade, whether you want to play spot uranium or whether you want to play a broad market ETF such as NUKZ or such as NLR, or if you just want to play the actual physical uranium, which is SRUUF, you can play those. They'll be a key theme, especially if you're looking for themes to hold into the next 2, 3, 4 years, and we're looking to get things early. We know that being a good stock picker in the market is all about finding these key themes, key bottlenecks that may arise into the future when there's very real big money being deployed and very real demand, right? So this is part of our phase 2 of AI that we've been talking about as we ended 2025 and into 2026. The same companies that were very popular last year or in 2024 may not be the best winners. They'll still win, but they may not have the most amount of upside. You want to always be skating to where the puck is going, not playing the things where the puck is right now, right? So pay attention to this stuff, more stuff of that nature. This guy saying, Ottavio Costa saying, no one owns energy today. This is exactly where the mining industry was a few years ago, although it's just coming off of lows. Take a look at this right here. Global energy, right? This is net percentage of your fund managers surveys, investors who are overweight energy. As you can see, it's just been dwindling down and down and down and down. So institutions, early ones, are bidding. A lot of retail is currently in, and myself as well, but the big money, the consensus trade, right, is not here. It is not a crowded trade, and we always love these uncrowded trades. So pay attention to this, guys. This is all forms of energy. We've spoken about oil and gas companies recently. We've spoken about a lot of solar companies recently. We've spoken a lot about nuclear power generation as well. All will be very valid. So you can either play this with broad market ETFs or sector specific ETFs. Speaking about more shortages. Now, for those of you that enjoy the gold and silver shortages currently underway right now, well, you may, and because for different reasons, obviously, right, for central bank buildups of stockpiles, for the thesis of de-dollarization and all that good stuff. Well, let me show you another area that's in deep shortages right now. Copper. Copper supply is a mess. Average copper grade in the year 1900 was 2%. The expected average copper grade in 2030 is only 0.5%. That's a decline of 80%. What does that mean, guys? It means that you have to mine a whole lot more copper to get the exact same grade, and it's exacerbating the production from a lot of these copper miners, right? It leads to higher costs, lower production, and more complex projects. What do you think that does to the price of copper over the next 2, 3, 4, 5 years, when we know that these data center buildouts, robotics, especially robotics, right, are going to require more and more copper. Here is your falling copper ore grades, which means you need to mine more and more to get the same grade and the same efficiency. And here are your major copper discoveries. They are in a structural decline. No new discoveries are being made. Not many new mines are being opened right now. So once again, what do you think is going to happen to the price of copper? So we can play this with many different ways. You can either play the copper miners, specifically if you want to try and get some alpha therein, such as FCX, or we can play this with a broad market, or rather with the actual commodity itself. Copper, CPER, would be the ETF ticker to track underlying copper overall. Or you can play with a broad market or a, something like a critical minerals ETF, either SETM. Now, this ETF is very interesting because it has many different critical minerals. I believe the exposure is about 30% copper. Then there's about mid to low 20s in terms of uranium and lithium. And then there's a whole host of other critical minerals involved in these ETFs. So you might look at this chart and say, wow, I missed it. Well, guys, we're talking about a multi-year thesis right here. So no, we are not too late, especially when we're talking about that copper exposure, the uranium exposure, and even lithium, which we referenced a few videos ago as well. Moving on to a different statistic right here. Pay attention to this one. Once again, more energy statistics. I'll keep pounding the table on this energy trade because it's big money, right? Everybody's plowing big money into grid infrastructure right now, and a lot of it has to do with battery energy storage systems, but also solar. Take a look at this, US annual additions of new electric generating capacity. You will notice that in the most recent few years, a lot of that has to do with solar, and especially battery storage, which is why you're seeing some companies doing really well, such as TE Energy. And you're also seeing, fantastic gains this year in legacy solar utilities providers, such as FSLR has been having a great second half of 2025. Not so much a great start to 2026, but I do believe that this secular trend can indeed continue. Solar was out of favor for a while. It's coming back in a big way. My small cap play is TE Energy. We keep talking about it often on the channel. We were in from down here, $3, $4, but when you're looking for a company that probably still has a few X's left into it, we are indeed still early into some of these names overall. And when we talk about battery energy storage, well, of course, these two names are always brought up. You're talking about FLNC, you're talking about EOSC. Some people are also in ENS and have been for a while, right? So battery storage, guys, pay attention to it. Battery storage and into, solar plays as well, especially grid-oriented solar plays, or the ones that have direct connectivity to the data centers, is going to be a very hot aspect of the market, right? And now, lastly but not least, speaking more about energy, guys, you got the gas turbine shortage, right? You'll notice that there's not enough gas turbines. Essentially, how it works is you take natural gas and you pump it into a big old gas turbine manufactured by GE Vernova or Rolls-Royce, and then that outputs electricity. So that being said, these companies are sold out, sold out, guys, for the next few years. GE Vernova has spoken about this in their most recent earnings call. The backlogs are absolutely massive. And obviously, one of the companies that does some of the conversions for this is Bloom Energy, which is why Bloom Energy has been going up so much. Fuel cell inverters and things like that, right? So there's a lot of aspects to this energy trade. But what you're noticing here, guys, to wrap up the pieces of news that I chose to have on today's video, right? What you're noticing is that to have alpha in 2026 is not as easy as it was in 2025. You might remember 2025 as a year of many things, Liberation Day and otherwise, but you may also remember it as a year of very easy plays. Last year was very easy. It was the first wave of AI. You could just invest in companies like Google or companies like Microsoft after Liberation Day, right? Or companies like Amazon, some of the big tech names, companies obviously like NVIDIA, companies like AMD, and you did quite well. You could also invest in the most popular and talked about stocks on all of YouTube and all of Twitter, which at the time, all of last year, were SOFI, Robinhood, and Palantir. But what we've been noticing over the past 2-3 months is that a lot of these companies, they're not the ones that have been having the most amount of gains. No. You have to look deeper. The alpha in the markets for 2026 needs to be, the alpha is obtained from looking into deeper plays, the second leg of the AI trade. There is no more easy money. I'm not saying big tech is not going to go up. Matter of fact, I own most of big tech. Big tech should do fairly well. But if we are looking for outsized gains, and I know that you guys want outsized gains, right? Well, you're going to have to look at second order AI plays, meaning everything that comes after the first batch of things, right? If you're looking for the next NBISs down here at like 40 bucks, if you're looking for the next Iris Energies down here at $10, $13, right? I'm not saying that these plays won't go up. Matter of fact, I still own them. But if we're looking for the new big money plays, well, we're going to have to look into things that require a little bit more in-depth thinking, right? Meaning that a lot of these companies already, right? The easy money has already been made, right? If you're expecting IRN to go up 5x this year as it went up 5x last year, it's probably not going to happen. If you're expecting Palantir to go up 5x again after it's already 5x'd in the last year and a half, it's not going to happen. If you're looking for SOFI to make the same move from 26 as it did from $9 when we were playing it down here, it's probably not going to happen. If you're looking for Robinhood to once again do another 5x from where it is right now, where it used to be from $20, it's not going to happen, right? I'm not saying that all these plays are not good. I'm just saying that they're no longer the same types of plays. These are now companies whose market caps do not warrant another 2, 3, 4, 5x quickly. They can still go up, but if you're looking for the X's, you have to start thinking of where the puck is going for the next narratives, and that's my job to present to you on the channel. Of course, we always cover legacy tech, and of course, I will always say that many of these companies are in attractive buying locations for larger cap, very consistent plays, right? But if we're looking for X's in today's markets and you're frustrated that the same trades of 2025 or 2024 just have not been working in the past 3-4 months, that is why. It doesn't mean that these plays will not get a rotation. Robinhood will probably get a rotation. Palantir will probably get a rotation this year as well. Very solid company, right? The Mag 7 is going to get a rotation higher, of course, right? That's for sure. So they will probably get the rotation. But if we're looking for the next bigger things, well, you got to go focus on what will be the new bottlenecks or where's the money flowing for the next narrative. And we've talked about this many times, where you got to go where the big money is being sent right now. And we know the key themes for this year: critical minerals, defense corporations, obviously. Why? Because of the big spending bill that's currently underway. You got $1 trillion this year for the big, beautiful bill, largely about $800 billion, but it's close. And then President Trump wants to increase that to $1.5 trillion for 2027. So obviously defense corporations can be very interesting plays. Space as well. I know a lot of you guys don't want to hear it. You think it's too futuristic, but it's here, it's upon us, and it is in front of us right now in terms of those data centers into space, and obviously thereafter energy. So key themes this year, guys. We have to focus on where the big money is and not get married to themes of the past, right? Especially when we know that the multiples don't support, Palantir to 3x again from here, right? It has to go from 400 billion to 1.2 trillion, whereas the company is only making like $5 billion of revenue. It's just probably not going to happen in record pace. And I say that as a Palantir shareholder, so I'm allowed to say that, you know what I mean? Like, I know what I own, and I still own it for a specific reason, but I do not own Palantir because I'm looking to make a whole bunch of money super quick from the market because there's an asymmetric return in the stock anymore. That's the moral of the story, right? A lot of these stocks, some of the popular ones from years past, they just do not have asymmetric returns in them anymore. The market caps are too high. So take that one to the bank, guys. That's everything I have for you guys for the news cycle and the key themes of this year. Once again, I told you guys we're going to spend a lot of time on this throughout the month of January to get you guys ready. As we move on into the next 2 weeks from earnings, I won't have time to talk about all this. We'll be talking about earnings, and then as we move into February and into March thereafter, I won't talk about these things anymore. I'll kind of take for granted that you guys already have been briefed for all this stuff. And then we'll just move on to daily recaps of the day, right? But the time is now to be exploring these things and doing your research on your own and getting brushed up on what the market is looking at for the next 2 years. It's time to learn about new plays. I know it's very easy to stay comfortable and stay in our old themes, our old plays, and just cross our fingers that they rally as much as they had in the past. but sometimes it's just not that simple if you're looking for outsized performance for a segment of your portfolio, right? I'm not saying your whole portfolio has to be in this type of stuff, but we do want to, if we know that we can have alpha in that section, we definitely want to explore it, right? So keep that in mind. Now, I won't be covering earnings today. I know there was a few big earnings reports in terms of Intel and in terms of ISRG. I promise I will do them tomorrow. Today, I wanted to talk about the news, the themes, right? And also just take a look at the charts since we've now filled the good old Greenland gap. So let's do that as a matter of fact. For right now, let's directly move into the charts. So moving on into the good old S&P 500, the market is looking pretty good. We've now filled the gap. We have a very nice retracement size right now. If you take a look, we lost the daily uptrend. That was a little bit of a trend loss right there, but now the bulls have largely recaptured most of that. That's a nice 78% bounce. So it's going to be really tough for the bears to fully engulf this without much negative news. Now, when we're looking for negative news, we have to explore. Do we have any macro that could possibly drop us? Well, as a matter of fact, tomorrow, no. We only have global manufacturing PMI, services PMI, and a consumer sentiment expectation from the University of Michigan, of course. So we don't really have, unless the president tweets something or whatnot, we don't really have the volatility catalyst to bring us further to the downside. So when you don't have those catalysts, the market will always embark on its most recent or rather follow its most recent news trend, which obviously has been the deal established in Greenland, or at least the framework of the deal, right? So the markets are looking pretty good. We're now sitting currently above our support level, 686 to 678. So keep that in mind. Your line in the sand is now down here to continue the daily downtrend. Weekly is still looking very solid here. We know it's been a slow weekly leg of expansion, but still with an upward trending bias. And the monthly just still remains in a bit of a sideways consolidation period, right? You wouldn't be surprised if we continue to break out a little bit further, as we do still have the very bullish macro tailwinds that we talk about often on the channel, but I will skip them for today just to save some time. Moving on to the QQQs right now. The Qs also decent recovery, but we know the Qs haven't been really doing much, right? We had this kind of tightening wedge pattern right here that broke bullish and then broke bearish, and now we're kind of back above that. So that pattern is now fully invalidated. We are now just back into this big range, right? And the reason why we've been stuck in this range is because big tech hasn't really done anything, right? They were usually the former market leaders. It's been good that we've been led by the equal weight S&P, meaning the 493 is performing better than the Mag 7 right now, which is why you're seeing so much outperformance in the equal weight S&P, right, versus the normal S&P, and why the QQQs are down, because your biggest players in the QQQs haven't really been doing much, right? So that being said, it doesn't look too terrible. Line of the sand is still put down here, 607.42. Watch that. You get the daily downtrend break. You're heading obviously one level lower under 600, but for now, it's not looking bad. We are still in this weekly pattern. When in doubt, zoom out, right? Still a very wide weekly tightening range. I think this one's going to break either direction with the big tech earnings coming in the next 2 weeks. So you break it to the downside, more monthly consolidation, possibly into the good old 12 EMA. That would be about 4 or 5% a bit lower. Not too bad. We do often touch this 12 EMA during phases of market consolidation. It would be a healthy backtest, but as of now, there's no indication of that. The bias still does remain long. Moving on to the XLF ETF right now. Financials, right? We know it's in a daily downtrend right now and into our support range, which is 54.30 down about 53.24. That being said, if you lose more ground here and continue this daily downtrend, where are you going? Well, the bulls are just looking for a higher low. Anything about 51.12, looking for the higher low, possibly for the re-expansion trade. And the monthly also shows signs of just healthy monthly consolidation. Now, what are we looking for, right? We talked about this many times. The banks embarking into their phase of monthly consolidation, possibly going for the 12 EMAs. That's JP Morgan. Bank of America, possibly looking for that 12 EMA backtest as well. Wells Fargo, same concept, monthly consolidation, right? Citigroup, far off, so they're not really participating to this downside. Goldman Sachs, still up there, not consolidating yet. Morgan Stanley, not consolidating yet. But you got a lot of companies, you know, Visa, definitely a very nice buy all the way down here. MasterCard, still a very nice buy. And the last time I checked my calendar, it's now January 22nd. And we still don't have the infamous 10% credit card rate cap, do we? So these companies are still very attractive buys right now. I don't think the 10% is going to pass through Congress, which is what it has to do to be implemented. But today we did have some news that I believe Citigroup and another bank were going to be offering promotional one-year offers of 10% interest rates for certain qualifying clients. So they're trying to front run it, but once again, right, if you apply 10% across the board to everybody, well, it's not really going to work, right? You kind of leave out 60% of the global population that just wouldn't have the credit scores to have a 10% interest rate on floating credit of that nature, right? So we'll see, still under development, but I do like the credit card networks because at the end of the day, guys, they got hit Don't forget, Visa and MasterCard are not the companies that collect the interest. No, that would be the banks. These are only payment networks, right? The reason that they've been coming down is because of the second order effects, because they would be getting less volume from the US markets if many people are no longer able to use their credit cards because they no longer qualify if the interest rate would be capped at 10% because their credit scores are too low or their payment history is too poor. Moving on to XLV right now. XLV Healthcare, not a bad day overall. Daily downtrend, nice engulfing move. So the bulls are trying to get the trend right back. On the weekly, same concept, right? A bit of a tightening range. We're looking for the breakout of former all-time highs, and the monthly also not looking too bad here. Healthcare, the place to be, right? In terms of 2026 for some upside. Now, I don't really own many healthcare stocks out there. There are some very high quality companies. We're not going to talk about healthcare insurance, but some of the highest quality companies in that whole healthcare segment, right? Eli Lilly has been performing really, really, really well. If we talk about pharmaceuticals, right? We can look at names like AbbVie. AbbVie also looking pretty good here for a possible rollout and breakout. And even a company like Vertex Pharmaceuticals, right? Not looking too bad. Months and months and months, dare I say years of consolidation in this very wide range of price action. Also possibly looking for the breakouts. Those are some of the more solid ones. We can talk about HCA, right? HCA is a little bit too extended for me. We can talk about ISRG that just had earnings tonight. ISRG, I am a fan and I do have this company myself. I would be a bigger fan of buying it under 500 if they offer that again, but so far no indication of them wanting to do that because they were up in the after hours after their earnings. I believe they're up a couple percentage points. Yes, indeed, they are about 537. So I'll bring some healthcare plays to your attention when I find them to be very notable, but the only one I've been accumulating right now is TMDX. It's a smaller cap play, but still looking good in terms of the price action structure. We're still kind of looking for the pending breakout of this beautiful under $5 billion market cap company with a very strong business model. So check it out if you're looking for some smaller cap healthcare plays without diving into the whole biotech aspect of the market, which I'll be very honest with you guys, is not my area of expertise, right? You need big insider, you need to be either, you need to work in a medical role or be very well versed with the segment to find alpha amongst the thousands of small cap biotech companies out there in the market, right? Moving into semiconductors right now, semiconductors not too bad. Right? Continued outperformance by this sector overall. Very nice daily uptrend, right? And the higher lows are set down here at about 389. So any move lower, you guys know the drill. Looking for a higher low for more expansion. On the weekly time frame, beautiful expansion. So in the event that you lose your short-term trends, should we get nervous? No. Natural consolidation probably into the weekly 12 EMA 371 back test of the resistance range, right? And maybe looking for a bit of expansion. But when we're looking for alpha, right, in semiconductors or whatnot, just talking about some of the larger cap names, right? Well, you guys might remember AMD was a screaming buy down here, 200. I pounded the table on this one. That one's been moving up, but there are a few other large cap companies that are down, right? So if large caps are your thing and you want to participate in semiconductors, NVIDIA is looking very strong. We keep saying it, right? Very good valuation too. Broadcom has consolidated quite a bit. Broadcom is in the buy territory for me right now. 325 down about 300 monthly, healthy consolidation. It's just a normal monthly pullback. I don't know how many times Broadcom is going to do this, but they're going to do this every time they get too extended from the 12 and pull right back into it. So we're coming in to the buying territory for Broadcom right now, and even a company like Marvell. Right, Marvell still very, very, very solid in terms of price action. Just looking at very clean charts, very strong companies with very big growth rates ahead of them. Still, that the markets have just chosen to consolidate. Meanwhile, other names are just a little bit too high, right? Like LRCX, sadly, I can't buy it anymore, both on a technical basis and also it's a little bit overvalued right now. ASML, same concept. I love this company and I own so many shares in my long-term portfolio, but I just can't buy it up here anymore, right? There comes a point in time where you kind of got to draw the line. And for me, ASML, that was on the break of $1,000 pretty much. So you got to kind of choose your battles in terms of taking some plays on some large cap names sometimes in terms of historical valuations and in terms of how far extended they are on the technical aspect of the chart, right? So I'm not playing the more extended ones. I'm playing the ones that haven't lifted off just yet. Moving on to the Russell right now, IWM continues to be a sector of outperformance. As you can see, it's outperformed the SPY and the Qs, and for a few key reasons, right? Number one, the backdrop of the macro, right? I keep saying this all the time when we reference the heat map. The big money is moving into cyclical aspects of the market that have not worked in the past 2-3 years for the following reasons. Number one, interest rates were too high. Number two, the rate of inflation also hinted at the possibility of a possible consumer recession. So the big money was kind of stuck in big tech, right? And not many other things, very specific AI plays to be exact, right? But now the big money has been broadening out to cyclical areas of the market. And in terms of cyclicals, I don't mean like mining corporations or oil companies, even though those are very strong right now. But you guys know the traditional definition of cyclicality. No, I mean macro cycles, right? Now, when you have low inflation, and we do have low inflation, Trueflation Index right now, 1.21. That's crazy, right? So low inflation market right now, high amounts of fiscal stimulus policy in terms of the $4 trillion in tax cuts, the AI megatrend, the strong earnings, the low unemployment situation right now, the very strong GDP, and of course, the rate cut situation with the end of quantitative tightening. All those things lead to a very nice macro backdrop. And as a result, the institutions have been pivoting into not only the rest of the market, areas that don't do well when inflation is very high and interest rates are very high, like consumer cyclicals or consumer defensives or some industrials or some utilities or real estate, right? Or certain other aspects of the market, such as growth names specifically, right? It's very tough to get the big money to invest into high beta growth names if they're not sure if they're going to get a recession or whatnot, right? If you don't have a favorable macro backdrop. So that's why the Russell has been doing so well. We've talked about it. I'm not going to say this every single video. I feel like I'm repeating myself, but I know that we just got a bunch of new viewers. Welcome to the channel, by the way. So I figured I should bring it up one last time. If you're wondering why so many growth names have been outperforming this year versus last year, them not doing too much, or the year before, that's why. The market's broadening out. It's broadening out to the risk on trade overall. Certain pockets of the risk on trade, because we know crypto has just been dead, right? But certain pockets, especially the ones that I keep talking about, energy, minerals, things of that nature, right? So keep in mind the Russell looking pretty good right there. Daily higher lows are set 261, looking for a new higher low on any drop for possible further uptrend continuation. The weekly is just broken out right now, looking very strong overall, and the monthly time frame also in a beautiful monthly leg of expansion. So if you're playing the Russell, no problem at all. The ETF will probably work. We're just now breaking out from a 4 years of doing absolutely nothing. And now we're breaking out higher, so looking very good. So this could be a very nice cyclical run for growth stocks over the next few years as we have strong GDP numbers and, fiscal policy that is quite stimulative and rate cuts coming down and possibly a new Fed chair in the month of May as well. That will be maybe more agreeable in terms of bringing down interest rates. So those are all things that do contribute to a fast-growing small cap and mid-cap market overall. So if you want to play the ETF, no problem. But if you're also looking for small and mid-cap names, now is probably definitely the time. There's tons of companies that we talk about on a daily basis and obviously in our Discord as well. So feel free to join us. Link down below in the video description. Moving on to some of our metals today. So metals, gold, very, very strong. We're approaching 5,000, guys. Right, very strong day on the Thursday session for gold, up 2.17%. Daily bulls in absolute full control. We've talked about this trade many times, how gold has many faces, right? So some parts it's an inflation hedge, it's the US dollar hedge, de-dollarization hedge, central banking trade as they continue to build their reserves rather than build reserves of fiat or reserves of bonds. So gold has been working really, really well recently. That being said, right, just pay attention on any pullbacks, looking for a higher low, possibly to the 12. They always touch the 12. At least they have ever since breaking out of this location in November, looking very strong. The weekly also looking very strong. Beautiful weekly breakout. Any loss of the daily uptrend, something like this, right? You're just looking eventually for a weekly higher low, and you can't say that it's not going to do it, right? It often does it, right? It did it here as well. So any big sharp pullback, you will be looking for a weekly higher low, maybe a better area to build some further swing trades. And the monthly just remains extremely extended, guys. This is like one of the most extended monthly charts in the history of gold, like literally in the history of gold. You have to go back to the 1970s to find RSI levels that are this high on the monthly time frame. It's been, suffice to say, a historic run. So keep that in mind. If you're looking to heavily position up here, the easy money on gold has already been made. Keep that in mind. That's going to be a recurring theme that I talk about throughout the early stages of 2026, right? When you know clearly that the easy money has been made on a trade, well, we can't position with the same size, can we, right? And we have to be a little bit more concerned with the risk to that trade. And speaking about that, we can talk about silver as well. Silver approaching $100. Congratulations to all the silver bulls up there. But once again, as the stock price moves up, the risk gets higher, right? Especially if you're a new buyer up here, expecting to make the same amount of money that people did when they were buying down here in the 20s or in the 30s, right? It's just not going to happen, right? Where are we expecting silver to go? $400 by March? Probably not, no matter if there's supply shortages and a difference between the paper and physical prices of these metals, of course, right? So keep that in mind. Moving on further here, guys, daily uptrend, very nice. Higher lows are now set at $90 overall. So if we do get a pullback after a $100 psychological rejection, if there's a big sell wall right there, you might just be looking for a higher low and higher high. In the event that you roll this over in a very healthy fashion, you'd be looking for weekly consolidation. Silver's done this a few times. Just watch the weekly 12 EMA, right, for the pullbacks. Very extended on the weekly RSI, very extended on the monthly RSI as well. This is one of the highest RSIs ever in the history of silver. You would have to go back to 1979 to find something equally as high in terms of overbought conditions. So as a result, just be careful with these trades. Trade them with a trailing stop loss if possible, right? Any net new buys up here, in my opinion, are extremely, extremely greedy. However, we can still hold as long as we're clipping out. If we're in from all the way down here and we want to clip out progressively through the various silver levels, not a bad idea to clip out some gains of a trade that's worked very well, a very overcrowded trade right now, and possibly explore some of the other critical minerals with nice use cases that we've referenced a few times during this video, such as the uranium supply shortage for the next 2 years, such as copper, such as lithium, and other things of that nature. So just keep that in mind. Moving on to Bitcoin right now. Bitcoin not doing anything, guys. 0.11%. So just struggling a lot right here. Daily uptrend, unwind, loss of all the trends. So we're still trapped in the gulag right now. Support 94,000 at about 84,000. No daily uptrend, no weekly uptrend. I don't know when crypto is actually going to make a move, but it doesn't look like it is going to be right now. So as of right now, no swing trades. For a swing trade, you need a confirmed daily uptrend so we can establish a tradable stop loss. So I'm not a fan of just buying here short-term call options because you can get very easily unwound for anything. It's had a very tough time breaking out. Sure, we can reference the MACD, which appears to want to curl over. We can reference the fact that we've been doing nothing for months and months and months and months, and now might just be the opportunity to go for the monthly upswing. We will see if the broadening out of the market eventually comes into crypto, but as of right now, it is kind of dead money for a little bit. It doesn't take away from the long-term thesis. It just means that it's just not a very active trade. So any buys made down here should be made with a short-term thesis, right? If you want to, you're definitely not playing Bitcoin because you want short-term momentum. If you'd be doing that, you'd be playing gold or silver, right? It's where the short-term momentum is if you're a day trader or a short-term momentum trader, right? Ethereum, same concept, right? Ethereum has been dead money now for a long time. Let's call it since October the 10th, the big sell-off here, liquidation event that Tom Lee always talks about. Daily uptrend lost, unfortunately. You got to get everything back. Obviously, big structure down here, 27 could act as a final stop loss if ever you're trying to build some swing trade positions here. Just keep that in mind. Weekly, no uptrend, just a bit of a awkward tightening range, no action whatsoever, no momentum. Weekly MACD, sure, it appears like it wants to curl over, but you're gonna need a big upswing, right? A big upswing, claim the weekly uptrend, then give me a MACD cross, and then we can be interested in possibly going for more monthly continuation. It's much easier to play these things when they actually give you the trend, right? When you switch the trend up, it becomes a lot easier, especially when you do it in a very big way, right? Like this. When you get a nice breakout like here, it's easy to put a stop loss down there and you just carry your trade up to the next level, right? We so far haven't had that. All the attempts have just been unwound one after the other. So keep that in mind on Bitcoin and Ethereum. Now that's it for that. Now let's move to the big tech names, shall we? Okay, so talking about big tech, first off, good old Apple. Now you might remember I presented some iPhone statistics the other day. They did really well in Q4 in China, right? In terms of gaining market share and in terms of just eclipsing everybody else's sales. So Apple, although it is in daily oversold conditions right now and the bears control the daily time frame, we are into a key area of structure on the longer form time frames right here. The monthly 12 EMA and the 26 EMA coming up soon. If ever Apple drops in between this area, this is exactly where I want to go shopping for a bit of Apple in terms of swing trades or in terms of some portfolio ads. It's the exact same location that comes up time and time again through various phases of consolidation on Apple in the market. I don't circle this area because it was a bear market of 2022, but when we're talking about a bull market, especially a broad-based bull market, we definitely have to talk about Apple. The stock is currently down about 8-9% year to date. So it's going to be a decent time to possibly go shopping for a little bit of Apple soon. That being said, the valuation at $250 right now is a little bit extended. I will admit a little bit extended, which is why I've been waiting for this discount. It's always a good proposition to go shopping on Apple when it's down 15 to 20% from the all-time highs in most markets. And this time should probably be no different. Their earnings are coming up though in the next week. Moving on to AMD. AMD, very, very strong push from AMD over the last 6-7 trading days from 200, where we said it was a buy, all the way up here, 27%. Very solid gains by AMD overall. So the bulls are clearly trying to recapture this daily uptrend. If they find a little bit of hesitation here at your former all-time highs, we'll be looking for a higher low. Just target probably this guy and your moving averages most likely as a fallback area. It's also the bottom end of the range. Like if I just put a line right about here and another one right about there to kind of encompass a lot of price action history, right? These guys, this guy, right? So here's probably your fallback zone, 238 down about 226 is what you'd be looking for a higher low in the event that we find a little bit of weakness here. In terms of the weekly is looking very strong. Nice weekly breakout, weekly MACD. Seems like it does want to cross. AMD has earnings coming up in 2 weeks, Tuesday, the 3rd of February. So keep that in mind. And the monthly has always been the most beautiful chart for this stock, right? It was a very clear attempt at a monthly higher low. We didn't quite get down to the gap fill area, 190 down to 175, but 200 down to the gap fill area was the buy location for me. We talked about it many times on the channel. Why? Because the forward growth rates for AMD are very strong, both revenue, EPS, profitability, and the thesis is very much alive. At 250 right now, is it still a buy? But yes, it might just be last call. However, you're trading at a 1 peg, a 9.17 price to sales. My forward targets for AMD, quite simply, by the end of this year, you would not be surprised if it's pushing 300, 350, and into 2027, end of 2027, probably like 400s, right? It definitely has the room to lift, guys, in terms of these multiples and the expansion they will be having. $400 billion company right now. Moving on to Amazon right now. So Amazon up 1.31%. Daily, they're trying to maintain, right? They held the higher lows right here, 224, new higher low printed 226. So we will see if Amazon has it in them to give a little bit of a pre-earnings rally. So keep that in mind. I believe Amazon's earnings are the week of the 2nd to 6th of February, right? 2 weeks from now overall for Amazon earnings. Amazon's still one of my favorite buys in the market, guys. It hasn't done too much. Weekly, looking for the continuation of the uptrend. Monthly, also continuation of this beautiful monthly uptrend, which has just been consolidating here. This is like the gulag, right? 230 down to like 210. It's been the big area of consolidation for Amazon. We're expecting Amazon to probably have a very, very strong year as they keep focusing on efficiency gains, free cash flow gains, EPS gains, and just accelerating every single line of business that they have. At 235, it's still a good bargain in terms of forward fundamentals. And I'll just remind you guys, for Amazon, right? Not only do they have so many different lines of business, but this is going to be the first company to achieve $1 trillion in revenue, likely by 2028. So keep that in mind, right? Amazon right now, $2.5 trillion market cap. I'm very bullish. It's probably one of my favorite Mag 7 names. I do believe that this will finally be the year in the sun year for Amazon. As we know, the last few years, it hasn't really done much, right? Compared to other companies out there. I do believe that this year is probably going to be a nice breakout year for them. Moving on to Google right now. Google remains in overbought conditions right now, at least on the higher time frames, right? The daily looks okay in terms of going for further expansion, but what doesn't really look okay are the weekly and the monthlies, right? It's very extended right now on the weekly and monthly timeframes. I'm not saying Google's not a great company. I have a lot of it in my long-term portfolio. I'm just not buying any more up here, nor am I looking for swing trades. It's a bit too extended for me. Weekly overbought conditions, monthly overbought conditions, and that's not the type of trade that I want to initiate here. It's fine for a hold, or it's fine for a bit of a trim and to reposition to some other companies that may just have a bit more upside, right? Essentially what I'm saying is the easy money for Google is gone, right? The easy money was buying it down here. We're buying it, right? Nobody wanted it. Now the easy money has been made. If you're looking for another 2x in Google this year, you're basically asking this company to go from a $4 trillion company to an $8 trillion company over the next year. That's not very logical, is it, right? It was much easier buying it down here, but if you feel left out, I completely understand, but maybe that's just the time to wait for a bit of Google consolidation. That being said, guidance for the company and performance of the company is very strong. One of my favorite companies in the market still, but eventually you got to draw the line on net new buys, and this has achieved the line for me, essentially, as the valuation is a little bit stretched towards the top end of historical standards for Google. Moving on to Meta right now. Meta up 5.66%. Very strong day for Meta overall as they test and implement their new AI models. That was the big piece of news over the course of the day today. Sorry I didn't present it in the news section overall, but you know, we can kind of see it here. They're also rolling out advertising on their threads worldwide, which is very big because I think they have somewhere between 400 or 450 million users on threads, which is basically their version of Twitter. So very strong. So you had some news about this in terms of threads, but you also had some news today in terms of their developments on their AI models overall. So very strong. You also had some key price target upgrades such as Jeffries, reiterating a buy with a $910 price target overall. So very bullish news day for Meta overall. But what have they done, right? We're just kind of back to where we were 2 weeks ago, you know? So not much has changed in terms of price action. The daily downtrend was well in motion, and now you got a nice engulfing move, right? So we'll see, can they convert this into a new daily uptrend? We've recaptured support, 643 down to 630, which is where we've been over the last like month and a half of trading. So Meta indeed still is a buy, in my opinion, around 650, 630. The valuation is quite compelling down here. And if we're looking for what Meta is going to say on their earnings to lift this stock, Mark Zuckerberg is going to have to do a really good job of justifying this CapEx and the expense profile. Okay, the operating expenses and the CapEx profile has to be justified. He'll probably talk about Meta's new push into offering cloud infrastructure services to the same effect of something like a Google, right? Google Cloud or Microsoft Azure or Amazon Web Services, right? That's what Meta wants to do with all this compute power now. But that wasn't clear. He didn't say that last quarterly earnings, which is why it dropped so much. People ask themselves, why are they spending so much money on these data centers? They're clearly not going to all use it for advertising purposes, right? They can't use it all in-house. So now Mark Zuckerberg is broadening the horizon for those data centers. So that'll be the focal point, guys. They're going to have good free cash flow. They're going to have good advertising revenue. Nobody's doubting that, right? But we want to hear what's in store for the future of Meta, right? That is what's going to really make the stock price jump in terms of guidance, right? For this upcoming quarterly earnings release, which will be next Wednesday. Keep that in mind. Moving on to Microsoft right now. Microsoft down 1.58%. So Microsoft still very soft. It says it in the name, right? Well, sometimes Microsoft is micro hard. Sometimes it's Microsoft. Now at this point, it's Microsoft. Sorry, I'll stop with the puns. I know you guys, some of you guys like them. Some of you guys think I'm crazy. But anyways, Microsoft, I mean, clear downtrends, right? Clear daily downtrend, oversold condition. And whenever it comes down here, we're looking to find confluence, right? Of things that when they happen, can they be good buying opportunities? Well, every time Microsoft comes down into daily oversold conditions, which is not very frequently, it can mark a local bottom. Here it marked a local bottom, but you didn't have any support. Right? There's nothing there except for this little dude right here. Yeah. But now what do you have? Well, you have all of these former highs plus daily oversold conditions that we know when they hit daily oversold conditions, here, it tends to mark some form of a local bottom for the stock. Additionally, you have the higher time frame moving averages, the 12 and 26 EMA on the monthly. Whenever we're between those, even in the bear market, it was a good time to buy, or COVID or 2018 tariffs, always a good time to buy Microsoft. It's down from the highs 20%. There's nothing fundamentally wrong with Microsoft at all right now. Matter of fact, at 440 or 450, it's quite cheap. 27 Ford P, 1.55 peg. So Microsoft down here for me is a buy. It's a buy for long-term shares. It can't even be a buy for myself for leaps. Not financial advice for any of you though. But I've been buying some leaps on Microsoft. Okay. And also playing some short puts under the market. I think there's really good value to collect some premium while Microsoft is down here overall. So keep that in mind when you're looking at Microsoft. Moving on to good old Netflix. Netflix down 2% today. Unfortunately, again, Warner Brothers Discovery Board rejecting Paramount's offer, opting for the merger with Netflix, backed by 93% of shareholders that support the deal. So that being said, still, even with that piece of news today, Netflix still remains extremely soft. That being said, daily oversold conditions, we're at a 19 RSI. When's the last time Netflix hit 19 on the RSI? You would have to go all the way back here to the 2 times during the bear market events right now. I don't believe they're going to have a second massive leg down of selling like they had back in 2022. That was a big bear market. Now we're in a bull market. Eventually, they will pick up Netflix. Mark my words, right? Maybe not immediately. We're coming into the very bottom end of support right now, though, guys, right? If you're looking for lower, the next area is 76, and then you would have to fall down all the way down to about $70. Now, I don't know if it's going to come down here. I have my doubts and my reservations because it already is daily oversold. It's weekly oversold. I don't think the sentiment on the stock can get any more awkward, any more negative right now. But, you know, until we change the trends, the bears are still in full control of this daily downtrend, of this weekly downtrend as well. Weekly oversold conditions every week for the past 10 weeks. Netflix has just been red. We covered their earnings at $83. Is it a buy? Yes, it indeed is a buy, right? But as I said, there is just a lack of visibility now for the Netflix deal. I think that the Warner Brothers deal would be very accretive to their business overall because they'll be able to have theatrical releases. They'll be able to onboard all of Warner Brothers Discovery's streaming service clients as well, and they'll just become a bigger platform to begin with. That being said, it's a sentiment problem right now, right? It has nothing to do, it's just people that don't think that Netflix spending $80 billion on Warner Brothers is worth it. And I get it. There will maybe be some, there'll be some initial merger pains, not really pains, but just, when you have to integrate a large company like that into an existing one, sometimes it takes some time. But will buys here on Netflix be rewarded for shareholders into the next 2, 3, 4 years, if that's your time horizon? I truly do think so. So it can be a very nice longer term buying opportunity. But obviously, for short-term swing trades, we have no time frame support. You would have to wait for them at least to reclaim some semblance of a daily uptrend if we're looking to go with some shorter-term swing trade longs with some size. If not, you're just perpetually catching a falling knife, right? So keep that in mind. Moving on to NVIDIA. NVIDIA still doing a whole lot of nothing around the magnet range, right? Resistance, support, support, resistance, support. Again, this range is just a magnet, 185 down to about 178 overall. Still looking very good, though. I know NVIDIA hasn't done anything, guys, right? But this comes back to some of the easiest trades of the past few years, right? Like, if you would have bought NVIDIA at any point in time during 2024, massive momentum. If you bought it the last time after the tariff sell-off, massive momentum, right? It's hard to move NVIDIA right now because it's a $4 trillion company. I'm not saying they're not going to have some massive expansion, right? They, of course, they're going to probably move to the upside as the year progresses. However, has the easy money been made on NVIDIA so far? The answer is yes, right? We can no longer expect a rapid 2x, such as the tariff sell-off or 2024, when it rallied 3x in like 9, 12 months type of stuff, right? So NVIDIA is still a buy for me, and I do have a end of year target between 250 and 275 on NVIDIA. So I am participating. Of course, I am participating, right? But you just have to realize, when something is gone so big, it's tough for it to move like it once did. So that being said, there's nothing wrong with the company, just further consolidation. The way that I enjoy playing this, any declines, you'll find me selling some short puts down here, accumulating some shares and some leaps personally myself for what I believe to be the eventual move towards the mid 200s in terms of forward price targets. And the valuation right now definitely does support that expansion, trading at a 23 forward multiple and a 1 peg overall. Moving on to a few more key names right here. Tesla, 4.15% to the upside. Elon Musk obviously talking about, I didn't bring it up, but Elon Musk talked about Tesla being a massive energy player in the future in terms of providing 100 gigawatts in terms of a build out to the grid, essentially, right? We know that energy is a big part of Tesla's business. Not many people talk about it, but it's definitely very notable. And also the headline that helped them today is that I believe that they were doing I don't want to mix up the cities, but they announced 2 cities. I think it was Austin and San Antonio, or I could probably find the news release for you, right? But there was 2 cities where Tesla was going into today with driverless robotaxis. Now that's pretty big, right? Because so far all of the robotaxis have been supervised endeavors. Now they will actually be unsupervised robotaxi trips. So that obviously got Tesla shareholders very hyped up today and also pushed the stock up 4.15%. So that energy news and the robotaxi news in combination helped do that overall. Now, in terms of your short-term trends, right? Well, we know that it was a massive daily downtrend, and now the bulls have a nice engulfing move, challenging resistance again, 460 down to about 445. So pay attention to that. Any move lower, you're going to try to set up the higher lows for a new recapture of the daily uptrend, unless they want to go for full engulfing, blast the resistance. Daily MACD is crossing. That's always a possibility. The breakout retest can be very valid as well. The weekly, this has always been a breakout retest on the weekly, right? So going for some swing trade longs, you arguably with this engulfing move have enough room, but keep in mind there's earnings. If it wasn't for earnings, because earnings can send this one up 7% up or 7% down. Everybody knows that, right? Pure price action wise, this is a tradable low that you can build a long position from here with a stop loss below here and go for the expansion of not only the weekly uptrend, but also the monthly uptrend as well. Nice consolidation range on Tesla, looking for the breakout beyond 500. So keep that in mind. There is a trade setup right here. The only problem is that it has earnings in the way. So even though it might be a nice technical setup, if for whatever reason the market doesn't respond well to earnings and you go down 7, you'll end up right down here and we'll have to revisit the technical areas for trades at that time. So please keep that in mind. If you're trying to go for that style of trade, you have earnings in the way. If you're very bullish on earnings and you think they're going to crush it and go up 10%, perfectly fine, but always remember earnings are a casino, but the chart does indeed look very good. The emphasis on earnings, of course, will be in 3 parts. Forget about the auto business. Of course, forget about the auto. And I can say this because I'm a Tesla shareholder, right? But people often, whenever we talk about short-term negatives, not me, because I acknowledge them, but when you go on Reddit or Twitter or, a lot of the Tesla bulls, right, they'll say, oh no, well, forget about the car business altogether. It doesn't matter that, sales have been dwindling across Europe and other end markets, although they have been doing good in a lot of places in Asia. I'll give them that, right? North America sales are relatively far off their highs of the past few years, right? People will say, well, don't focus on this aspect of the business, focus on the long-term positives. So once again, the earnings call will probably be a whole bunch of forget about this aspect of the business for now and focus on FSD, robotaxis, focus on Optimus, and focus on the energy rollout. And we'll be covering earnings after they happen next week, of course. Moving on to good old Palantir. So Palantir up 0.34% on the day, but still break of structure, right? Daily downtrend, loss of the big support area. Now it's going to be acting as resistance, 185 to 170. On the weekly time frame as well, we're still in a bit of a tightening range, but pay attention. You don't really want to crack those lows. Best case scenario for Palantir is get a nice bounce and reclaim this area and try to make a move to the upside. But in the event you do move to those lows, guys, we will be testing the 12 EMA, the ever so elusive 12 EMA for Palantir. And I say ever so elusive because they haven't been able to test it recently, right? But Palantir is another example of those trades that worked very well. And I can say this because I'm a Palantir shareholder, right? I'm not just criticizing from the outside. And I know it. And I've been saying it on the channel for months and months and months at this point, right? If you're buying Palantir here or here or here, you will not get the same returns as somebody who was buying here or here or even here or even here after the April tariff sell-off. It's just the law of large numbers, right? They will have to now keep beating on earnings and keep ramping revenue. And that's not a question. I'm still very bullish on this company. I love this company. I love the management at this company. I do like their products as well. It's a fantastic company in my opinion. That being said, in terms of the numbers that they put out, of course, right? That being said, the valuation is indeed expensive, right? It's suffice to say that everybody who would have known about Palantir or who would ever buy Palantir is probably already in. So who is your incremental buyer up here, right? Here was retail FOMO. For a very long time, retail FOMO. Everybody who now, everybody who would have ever bought Palantir is now aware of this stock, right? So it's not as if you're going to have people plowing into Palantir with their very first purchases going super heavy here thinking, oh yeah, I could probably make another 2, 3x, 4x on Palantir in a super short amount of time. No, probably not. So that being said, is Palantir a buy for me? Up here, no, unless you have a very long time horizon, 5+ years. And I say that to you as a Palantir shareholder myself. I like this company. I'm not selling my remaining shares. I will let them expand the business progressively over time. But the valuation now is very lofty, right? They will continue to have to execute, which I have no doubt that they will, but, it's just the incremental buyer dilemma, right? At this point in time. Moving on to SOFI. SOFI is kind of the same issue, right? And we've talked about this for a long time, although the technicals on the chart look very good. Technicals on SOFI, are very attractive right now. It's a very wide consolidation range, overhead resistance 30 down to 28, and below support 25 to 22. We know that, right? It's just been trapped here doing a whole bunch of nothing. SOFI has earnings next Friday, so keep that in mind. They may not move that much until Friday, right? On the weekly, just a whole bunch of nothing, no clear trend right now. So the favorite way that I like to play this is by selling puts down here, 25 to 22. I think it's a nice buying location, or at least a nice area to farm some credits, and its previous resistance, which is currently now support. But SOFI is also the same dilemma. And I say this as a shareholder with a cost basis in the 11s, okay? So I, once again, can say this. If you're buying SOFI up here, under the premise that you will make as much money as people who bought at 6 or 7, or people who bought at 9 and 11, and this was the most talked about retail stocks, arguably for the past 2 years, right? It's just not going to happen anymore. Is it going to go up? Of course, or I wouldn't be holding my shares anymore, clearly, right? But you have to understand where it is right now. It's a $32 billion company. Can they ramp it up to 50, 55, 60? Yes, and that's what I expect them to do over time as well. But will it be as fast as going from 9 to 33, right? Probably not, okay? But I am still very bullish. Monthly looks great for some forward expansion into 2026, so keep that in mind. Valuation is also quite compelling, but please just don't get into this with the premise of saying, oh yeah, for sure, if I buy SOFI, I'll make as much money as these guys who bought it last year, for sure, because everybody's still talking about it, right? It doesn't usually work like that. Moving on to Uber right now. Uber, not too bad of a day on Uber, 2% to the downside, but still hunting for a daily higher low. They've given back all of the gains. So once again, this is just a question of the longer term bears being in control, right? Weekly downtrend has just been very soft. So eventually we'll have to put another movement up here and try to challenge this resistance area, 91 down about 87. So keep that in mind. For the time being, while it's down here in a phase of monthly consolidation, just like Microsoft or just like many other names on this list, when you're in monthly consolidation, this is usually when you want to build a position or sell some put options to farm some premium down here. The valuation at Uber at $80 is quite compelling right now. Low 20s multiple, 1.43 peg, 5.25% free cash flow yield. And I'm not here to convince you to buy Uber or anything like that, right? And I know that some people just don't want to buy the stock because they think that autonomous vehicles are too much of a threat. My personal opinion is that there will be some synergy between Uber's business model and network effects and autonomous vehicles, meaning that they will work in tandem before one takes over the other, and it'll be years and years and years before robo-taxis ever usurp Uber's business overall. They'll still be growing revenue, they'll still be growing bookings for trips, their mobilities and delivery segments overall, still printing a ton of free cash flow, still doing a bunch of buybacks. So indeed, I do think there is further upside on Uber, but I get it. If you don't want to buy this company because you think the threat of autonomous vehicles is too large, completely fine. I do respect that thesis. Moving on to TSM right now. TSM up 0.38%. Sadly pulling back though. So TSM had a great showing into their earnings. And even though they had phenomenal earnings, which we covered on the channel last week, they have done nothing but kind of pull back ever since. That being said, clearly what's happening is we're just going for a bit of a weekly higher low. If you do come down here, 310 out of 300 is nice support for TSMC. So looking pretty good. The monthly time frame is slightly extended right now too. So any back test right here, right? I can't take this trade on the back test with big size, but it can be interesting for a trade attempt. I'm not building any lead call positions or things like that here. That being said, around 340 or under, we covered them after earnings. They are cheap. The company has great visibility through 2028 in terms of pricing power, in terms of demand as well, increasing their guidance, to 25% per year revenue growth through 2029. So amazing visibility from TSM. And usually companies don't do that. They don't raise their guidance for 4 years at a time, right? You can only do that when you have tremendous visibility. And just TSM's visibility alone and what NVIDIA has been saying too should tell you that the AI trade is far from being finished right now. It's currently trading at a 26 forward multiple, a 1.37 peg overall too. So keep that in mind if you're looking to invest in TSM. And that's everything I had for you guys for the overall market rundown. Now, let's get into everybody's favorite segment of the videos, which is the biggest gainers and losers of the day. All right, so first one as part of this list, we'll start with some companies that are red. There's not that many, so let's do them right away. Celestica coming down at one point today over 9, almost 10%. The reason being is that there was some news, some rumors that Google was going to swap, because Google obviously has their TPUs, right? Google was going to swap some of their TPU components to a different supplier, right? Because Celestica manufactures electronic components for all of those TPUs, Google being one of their biggest clients. So obviously when that news hit, it was a rumor, but enough to bring Celestica down. Now I'm sure a few of you are wondering, now that Celestica is all the way up here after these massive rallies, kind of like Micron and SanDisk, is Celestica still a good buy moving into the future? Well, as a matter of fact, although technically it's very extended right now and hasn't completed a backtest of the 12 EMA, which would be ideal buy entry locations, at $300, I can't say the company is necessarily expensive either. Yes, the EPS growth rate will be eventually slowing down, but that's not going to come for a very long time, right? We know that their EPS growth rate is still extremely strong through 2028. They'll be printing EPS, and the revenue growth rate is equally very strong, right? If we're looking for visibility, Celestica is only a $33 billion company. In 2027, they'll be bringing in $21 billion worth of revenue. So technically speaking, well, not technically in terms of the chart, but technically in terms of the fundamentals, the company is indeed a buy here. It's a decent buy here, but best is down there in the event they do come down for the full retracement into the 12, which would give you the optimal combination of decent fundamentals and a very decent technical entry as well. So if you guys are in Celestica, I don't see any reason to sell. If you're looking to add to Celestica, you can still justify the buys in relation to their growth rates moving into the next few years. So keep that in mind. Talking about KTOS, one of the fan favorite defense names overall. Well, KTOS is the perfect example of a company. We covered it yesterday that is a little bit expensive by all metrics. It's a $20 billion company right now. And in terms of the price to sales visibility that we could have, well, their forward sales for this year is 1.59. If you take next year, 2 billion, it's still trading at 10 times 2027 sales. So top end of the valuation range, in my humble opinion. The best time for KTOS was down here. I do remember covering it with you guys down there. Massive expansion. I mean, from the bottom to the top, 2026. This is only since January, guys. 22 days into the year, right? It was up 80%. So eventually, you kind of got to draw the line somewhere. I would be looking for maybe some back tests down here, maybe under the $100 mark if I wanted to reposition. But I've kind of held that same analysis ever since we started moving up here. I was saying, I'm not going to play it on the upswing, but maybe if they give me a nice entry on the pullback, maybe we can revisit this play overall. Talking about a few more things, perhaps, maybe that might be interesting for us today. Credo, I know a lot of you guys enjoy when I talk about Credo. Credo is indeed also possibly a bit of a nice swing trade entry long here, 135 down about 120. The company is not very cheap, so to speak. I keep forgetting to put these prices, but just keep in mind the prices are around now. I might as well do it now, okay? Because I did these right around here because I have a slight swing trade position on Credo at right around here, about 130, 135. So the PEG ratio is pretty good, 1.25. EPS growth rate is 30. It will eventually be slowing down, but not for the foreseeable future, right? Very strong EPS growth through 2028. Right? And then revenue growth also very staggering right now. The only slight issue with Credo is that kind of like KTOS, right? In terms of forward price to sales, it's trading, well, at this year, it's trading like a 15 price to sales, right? Or rather, 13, 12, but who's counting? Closer to 15. In terms of 2027, you can justify it. It's trading just above a 10 forward price to sales multiple. So it's not as if it's cheap, right? Cheap would be like buying it back here. You know what I mean? At like 80. That's cheap. Here, I do believe because of the growth rates, it's fair. Okay. So I'm not going to say cheap. I'm not going to say expensive. It is fair, right? A lot of electrical components as well, in terms of lots of cables, wires, and other things of that nature. Very strong company, has its place in the data center narrative. Matter of fact, them, ANET, probably some of my favorite players. A-Lab as well, if you're looking for some of the high beta, high volatility names that are not necessarily small or mid caps, that are kind of like, 20, $30 billion companies style of things, right? So not too bad there as well. Moving on a little bit further, AVAV is my military/drone new entry company. I was building a position yesterday at 312. I will DCA that through the mid 200s if we ever fall back down there. AVAV is not too bad. It's a $15 billion company. And here the valuation makes a little bit more sense if you take price to sales, because some of these companies, right? Big EPS boom. So sorry, I don't have the PEG ratios for all of them, but just natural price to sales, fast growing companies in terms of revenue, double digit revenues overall, right? Usually we're looking for about 10 price to sales. And this one does respect that overall. We're trading at just under 10 price to sales, 8 price to sales for 2026, right? And then over further into the next few years, fairly attractive in my opinion. AVAV, it's not objectively cheap as you could have found it last year perhaps, but it's not that expensive. I've been building a little bit of position. I think it's going to be a very favorable company into the next few years as they expand their offerings. We can talk about the data center trade a little bit, right? CoreWeave, NBIS, IREN, all that good stuff, guys. You guys know me in terms of these names, right? This one is all, depending which one you prefer the most, right? There's this one, there's APLD, there's CIFR, there's IREN, of course, there's NBIS, there's some people also enjoy playing TerraWolf, things of that nature, right? So I'll let you guys do your own due diligence as to what companies are the best in terms of that trade. Of course, I know as a YouTube presenter, I'm supposed to tell you that stuff, but I'll do 85%, but you guys have to do 15 at least, right? I'll try to give you guys my most, right? But CoreWeave, indeed, I do believe it's been an attractive opportunity, and I've stated this, right? From 90 down to like 70 where they were, still a decent opportunity in terms of their forward growth rates, in terms of the forward capacity that they'll be bringing online through 2028, and we covered that on their earnings through November the 10th. Of course, they have the most amount of debt from everybody else, but they also have the largest pipeline from everybody else. We know that when you're building data centers and offering power, or rather offering compute capacity, we know that debt and data centers kind of go hand in hand. So if you can stomach the debt, CoreWeave is still a decent opportunity with some nice upside, in my opinion. I'm in CoreWeave, I'm in IREN, and I'm in NBIS. IREN for me is like mid 40s is best. NBIS down here into the 80s, right, is best for me. And I'll continue to kind of build out those positions. Where I draw the line for these companies, I don't really want to buy NBIS over 100. I don't really also want to buy IREN over 50 where it is right now. I'm not saying that it's bad in terms of forward growth. Definitely not. We cover these every time they have earnings, right? The forward growth is massive for these companies, right? Even at 62 when we did it, we saw that the valuation on a forward basis is not too bad. Price to sales and PEG ratio. It's just to get the optimal, best reward to risk, obviously. Those are my areas, right? I prefer IREN under 50 down to 30, of course. I prefer NVIS 100 down to 80, roughly, of course, as well. And I prefer CoreWeave 100 down to 80 for that trade too. Now, obviously, I can't cover every single name on this list, but I think that does a pretty good job of covering some of the most notable ones to me over the course of the day today that sold off. Obviously, we do a lot more when we cover the index analysis, when we go through that segment, or the news segment, when we bring up many different themes. Such as today, we spent a lot of time speaking about energy and spent a lot of time talking about critical minerals. So critical minerals, this trade is very, very large. Whether you want to play USAR, whether you want to play UU, I'm not going to go through all of them, guys. It'll be endless, right? UAMY, you can clearly see it's been a very popular trade. A lot of these, right? CRML, which was the Greenland trade, that was up 20% today overall. So clearly critical minerals is going to be a very hot topic. There's many ways to play this. If you guys don't know, because it would take me, I could do an entire video on critical minerals, right? But that's not the point. I do in-depth analysis for when we're in the Discord with our members and things of that nature. But just broadly speaking, right? The best way to do this, if you're looking for some of the better plays, is you go through a critical minerals ETF, such as this one, SETM right there. And then you kind of look at the individual components. Or you can use AI, or you can use Grok, you can use Gemini to use AI and say, out of these names, which ones look the most promising in terms of the nationalist interests of the United States and reshoring, or rather expanding some mining capacity within the continental United States, right? There's many of them. There's ELVR, which is the lithium mine that, the lithium producer that Tesla uses for its lithium refining capacity. So there's many names here. I'm not going to talk that much about them, right? But suffice to say, it's a very popular trade. It's a theme for the next few years. We know that there's going to be a lot of volatility. This one, the most popular one, obviously being MP Materials, but we also know that it takes a lot of time to get a lot of this production online, which is why I say, if you're buying any of this stuff, you can play it in two ways. You can play it for the momentum. If you're playing it for the momentum, just keep your stop losses in check below the most recent higher lows, just to make sure you don't get unwound, such as these people did when they FOMO'd into this trade and then just got unwound right there, right? So keep that in mind. But a lot of these plays are probably best held for the multi-year thesis for critical minerals, right? Since we know that the United States is trying to get out of their the reliance on China, because we know China controls so much supply of these critical minerals. So, to get that same production capacity, it will take a few years to actually manifest. It doesn't mean these stocks won't run much ahead of their forecasted revenue schedules, which is always the case, right? The market's forward-looking. They try to find the alpha right away and then price everything out really quickly. So, just keep that in mind when looking at some of these companies overall. We already talked about ANET. I really enjoy ANET, and it was up huge today. We were talking about it down here being a very attractive opportunity around the 200-day moving average, which consequently was also the 12 EMA. Now you guys know why I love the EMA so much, right? The 12 EMA on the monthly, just such an easy trade. And the valuation at 120 was also more manageable. I wouldn't dare say cheap, because it's not trading at 14 price to sales at 120 and a 1.83 peg. So it doesn't necessarily qualify as cheap, too cheap, but it was fair, attractive enough to warrant some possible buys for the expansion of the data center trade overall. We talked about Lemonade yesterday with their partnership with Tesla. That one is obviously broken out right now. If you're looking for a back test, look no further than this little area right here into the mid 80s. So keep that in mind for Lemonade. Still very attractive right now, $7 billion company in terms of forward price of sales. It might appear that you're not getting a good deal, but if you have a long-term thesis, which many Lemonade investors do, just keep in mind, it's trading about a 7 forward price of sales. We can't use EPS because they're not yet EPS profitable, but very attractive company, guys. Extremely attractive company. I used to play so much Lemonade back here in this 2021 rally and then kind of stopped for a while, but I might be looking to re-explore this trade. If you give me a back test, maybe I'll be looking to participate as well, but no positions for me right now. I can't be in everything, right? I know it's a very solid trade, but I also have tons of other solid trades that I've ran an absolute ton, such as T Energy, right? T Energy, looking at this one yourselves, guys. I've presented it a few times on the channel. Vertically integrated solar, and everything from the silicon to the actual solar panels, right? So keep that in mind for T Energy. Could be very popular. This solar trade, the battery trades, FLNC, which is lithium ion, EOSC, which is zinc, of course. Pay attention to those. Bloom Energy, this one is A little bit late, in my opinion, right? The perfect area was obviously the 12 EMA backtest, which I keep talking about, right? But Bloom Energy is a little bit too high, $34 billion company right now. So, you know, it's a little bit stretched, even though it is on theme, on narrative. We can find on theme, on narrative plays that are also not extended fundamentally speaking, right? So Bloom Energy currently trading at $34.5 billion. In terms of forward price of sales, if you want to use 2027, that's okay. But keep in mind, the more you stretch out the years, the more you're kind of trying to compensate for the lack of valuation right now by going too far into the future to find a confirmation bias. At least that's my opinion for things. You know, 34.4 billion divided by, let's say 2027, 4.18, you get a price to sales ratio of 8.22. So maybe you can justify buying all the way up here, but possibly, you know, best was really under 100. So please keep that in mind, right? There are other plays that have great price to sales metrics like EUSC and FLNC and things of that nature. So you don't always have to buy things that are, you know, exponentially running at their highs up. What is Bloom Energy up? You know, Bloom Energy is up since the start of the year right here. How much are they up right now? What, like 73%? Highs was 82%. So, you know, like how much more do you want in 22 days worth of time, right? But the pullbacks, if you get a pullback maybe in a structure, you know, closer to 100s, like teens, like 115 down to 100, right? These guys, and then down in the more of this price action, which you can see a little bit better on this weekly time frame right there. Maybe those guys could be an interesting re-entry trade overall. So keep that in mind. Let's see, what else do we have that you guys might want me to talk about? UiPath, still very bullish on this one. Accumulation phase. I'm looking for expansion on UiPath into the 20s and 30s by the end of this year overall. I think this one is probably undervalued and underloved by Wall Street analysts, but it has a very big retail community of 6.69%. This one, unfortunately, after their earnings got dragged down with the rest of the SaaS trade, even though it shouldn't be down there because it is, in my opinion, pure play AI. So UiPath is definitely a buy for me down here. Zeta is definitely a buy for me down here as well. We were talking about this big old breakout from this area retest, right? So I didn't put a box there. Maybe a box would be a bit more clean just so you guys can kind of see the price action and how it's developing, right? So previous highs right there. Key area of price action. We've now back tested it, looking to lift. So Zeta, I like very much. It's like a 3-4 price of sales. Sorry, I don't have the valuation up here. I'll probably do it for earnings coming up soon, but still a very attractive company in my opinion, which leaves me in maybe another attractive opportunity, PGY. Some people wanted me to talk about PGY. PGY is a buy for me down here, 22 down about 18 bucks. Very decent company overall. Also, this is just loan wholesaling, essentially using an AI algorithm. So very fitting for the current themes and narratives in the market right now. Overall, they're not like Upstart that actually holds all the loans on their balance sheet. Pagaya does not have to do that. Analyst price targets all clearly above the current stock price, and EPS flipping to positive territory. This is when you want to pay attention to these companies when they flip to positive EPS. And revenue, very nice revenue growth rate. It is a $1.78 billion company, which in 2026 will be making $1.52 billion in revenue. So I love finding these companies that have nice upside, that have nice narratives overall. As we know, loan demand will probably be stronger this year with the reduction in interest rates, right? We are coming perfectly back into a monthly area. I wish they would remove that early section of the chart, but you can clearly see, right? It was big resistance for a while there. You broke out, you came all the way back down. Now we're just looking for the re-expansion. So there is a lot of alpha in small caps right now. There's just a few that I'm kind of looking at, right? Small caps, mid caps, anything between $1 billion to $10 billion range could be a very interesting area for you guys to explore over the course of this year, especially with respect to themes, energy, minerals, right? Anything second order AI plays like UiPath, or see Pagaya right here, which has some AI integration, or, you know, companies like Lemonade, which are using AI for insurance, right? So there's many different second order AI plays here that are kind of outside of the ones that people were traditionally playing last year overall. So I think that's probably going to do it today here, guys. I know I didn't cover every single stock in the books, but I'll try to do my best to cover as many stocks as possible. I think in any given week, depending on the biggest gainers and losers or the themes that did well throughout the day, I probably cover a good like 50, 60, 70 companies on rotation per week, whether when I'm doing the indexes or when I'm doing this biggest gainers and losers section, right? So I can't cover everything, but hopefully from the things that I do cover, maybe you guys get some indications. We've talked about software a lot recently as well. So tomorrow, I'll try to do a little bit more. Either I film it tomorrow or Saturday. I'm not quite sure just yet. If I don't do a video tomorrow, I'm not too sure if I have to go out tomorrow night, but if I do, then the video will be Saturday. But there definitely will be a weekly recap video. We'll do Intel earnings. We'll do intuitive surgical earnings, ISRG, and then we'll try to cover maybe more of these key themes and more of the names that I'm looking at a bit more closely moving into the early portion of 2026. But for now, that's all I had for you guys. So hopefully you guys enjoyed today's video. If you did, would really appreciate it if you dropped a like. Helps me grow the channel. Consider subscribing if you're new. If you like this style of content as well, would love to have you back. And last but not least, if you have any questions, guys, please feel free to leave them down below in the comment section, and I will get back to you as soon as possible. Always love hearing from you guys. Feedback on the video, or just say a quick thanks. Really appreciate that as well. Or if you are looking at any plays whatsoever, feel free to let the chat know, let the viewers know what you are possibly looking at down below in the comment section as well. And last but not least, if you guys are tired of trading and investing in the markets all by yourselves and you would like to do so as part of a group of very active members, we have over 350 members in our Discord right now, and I would love for you to join us. The link to join us is down below in the video description. And of course, in the Discord, you get access to a few key different things at the same time. Number one, you get access to all of my trades in real time, whether they are the wheel trades or the other trades that I might do in terms of directional trades with small cap names, mid cap names, either using call debit spreads or shares outright or leap call options that I do all the time. Not only do we farm credits with the wheel strategy, which is what we specialize in, but we also take directional bets in either long-term portfolios or trading portfolios in key themes and narratives of the moment, which we talk about every single day in there. So you get access to all my trades in real time. And you also get access to our morning live streams where we do a lot of work in this stuff as well. We trade. So every morning, Monday to Friday, I stream live for about 2 hours at the market open. I trade live for you guys. And then I answer all of your questions on your stocks, your options, your long-term portfolios. We talk about these themes. We talk about these names all throughout the morning. So that's the best place to get a lot of the information that maybe you don't get in today's in the YouTube videos or whatnot. I go a lot more in detail in the analysis for many names in those live streams. Our members really enjoy being there. And lastly, well, not lastly, but you get access to all our chat rooms. You can ask me questions all throughout the day. I'm very fast to answer all week, Saturday and Sunday included. And also you get access to our private video section, almost 15 hours of education in there. How to build a long-term portfolio, how to build a trading portfolio, depending on the size, right? In terms of various risk to reward strategies, right? How I do my leap call options, how I do my call debit spreads, different wheel variants for the wheel strategy, right? So many educational videos, how I do fundamental analysis, technical analysis, so many different videos in there that I'll never put on YouTube. That's all the learning material. And last but not least, you get access to all my charts whenever you see charts like this, where I do support and resistance areas. If you guys just wanted to copy all of my support resistance areas that I update all the time and all my fundamental breakdowns on hundreds of companies, not all, because this watch list is like 200 companies, right? But I have so many fundamental breakdowns, on a multitude of various aspects of the market. You can just copy paste all of my charts, and that comes included as well. So the link to join us, if that interests you, is down below in the video description. As I said, I would love to have a few more of you guys in there soon. Hopefully I do see you in there soon. And if not, I guess I'll see you right back here on the channel, guys. That's it for me. Have a great rest of your evening. I'll see you either tomorrow or Saturday. Still unsure. I do have some tentative plans for tomorrow with some friends, so we'll see how that works out. So see you guys over the next 2 days. Hopefully you've had a good week in the markets. That's it for me. Take care and peace.